Hello, one and all. So I'm just going to quickly go through what are the fundamental things that are moving the market this week. So we do have some big events going on. I guess what we'll do is just kind of quickly recap, and I hadn't, and you kind of, we say, anticipated for this. Let's just look at, I'm just going to bring up the S&P. We'll look into the more advanced chart, as you see here. So where are we? Here. Basically, we had a massive sell-off. This came from a massive amount of fear, should we call it, at the whole Jackson Hole. I called it a symposium last time, but it's just like an event where the Fed chair came together. Well, a lot of the different Fed presidents did, but it was most importantly all around Jerome Powell talking about his plan for the future with regards to interest rate hikes, etc. So looking at the futures, they dropped massively on the news. And this was basically Jerome Powell just saying, look, guys, you know, we are going to keep tightening and things are going to get worse before they get better. So everyone kind of lost their head a little bit. We saw this in the S&P. We saw this in, let's say, the QQQ, which is the NASDAQ, the ETF that tracks that, big drop there. We also then saw it in Bitcoin as well because of that massive correlation of, you know, risk on, risk off assets. So we did see that drop, not as instantly, but still we did see that. And we are now seeing a recovery, which is good. And if you saw our video earlier, you would have seen that we anticipated this. So we said, look, guys, the RSIs, they're at crazy low levels. They do need to reset. So we anticipate a bit of a movement to the upside, maybe kind of pushing up to this kind of 21K mark. Seems to be a little of a local area of what was support, now going to be resistance, this area around here. So that's where we might see a bit of a push to the upside, but I think we're going to see more movement to the downside. Now, I mean, one of the reasons is that we have now the extreme fear back in the market. And like I said, we're all looking at this. This is now even this changed from when we did it earlier. When we did it earlier, it was like 66% or so. But I guess we have had the beginning of a trading day in the US. For me, it's like 9 o'clock. I just come back from walking my dog. So I'm not currently on Wall Street, but as you see, the data is in. The data is currently on Wall Street. And so we have a 74% chance of a 75 basis point hike, 0.75% of a rate hike. So this would bring us up to, from this 2.5 upper limit to that 3.25 upper limit. So it's going to be in that region of 3 to 3.25, which essentially, guys, I know I've said it before. I'll tell you, I said it before. I'll say it again. This means that it's going to cost more for the banks and essentially companies to be borrowing money. Now, if it costs more, then obviously when you give them money, they can give you a higher interest rate because they don't have to borrow. But then also, if you do borrow from them because they've borrowed it from someone else, it's going to cost you more money. So this is why we're anticipating a bit of a housing squeeze. I'm not going to say crash, but a bit of a squeeze pretty much globally, because people are not really going to be wanting to buy houses when they have such a high level of interest to pay on these houses. And also at the moment, prices are dropping. So you buy a house and, it's kind of cheap, but actually, because of the interest rate, it doesn't really make a difference. But anyway, most importantly, we're seeing this reflected in the stock market and, of course, in the crypto market, as you see here. Now, I do think this little drop we've had over the weekend has kind of put us in, I guess, in a good stead for pricing this in. Do I think there's more room to the downside? Yes, I do. Quickly, guys, what's going on this week? So tomorrow, this is included in the next 7 days, so we're going to stick on this. Coming up tomorrow, you have inflation in Germany. Now, you might think, well, that doesn't really affect the crypto market, but this is where the puzzle gets very intricate. So inflation in Germany basically means, well, look, if it's like really, if inflation is really low, then you want to be in the German market because, the euro is going to pump. Maybe the German Bunds, which is like a German, it's a really funny word, but it's the German treasuries, so like, you have bonds. Like there's basically German bonds, they're Bunds. So you kind of, that the inflation will affect the DAX. It will affect the local markets. But at the moment, if it comes in higher, then you don't want to be in that market. So what are people doing? They're not just going to jump in and say, oh, it's definitely going to be low. What they're doing is they're holding off. And whenever they hold off, and they're going to be holding off not just tomorrow, but the day after, because they're holding out for, well, what if Germany has crazy unemployment? What if France has a crazy high inflation? What if the euro core inflation is unbelievable? What if Italy's gone down the toilet? So all of these different questions basically mean, if I'm a big investor, should I be putting my money in the eurozone? Probably not, because there's so much uncertainty. So if there's uncertainty, I'm going to park my cash, I'm going to stay somewhere safe. And where is that going to be? Let me actually bring up the old charty-roo. The DXY, hit me up. This is the US dollar currency index. So as you see, I mean, it's at 22-year highs. It's unbelievable. It's on a tear. And there's quite a lot of data on this chart. And I'm not going to bring it back, guys. We went through this in our daily stream earlier. So make sure you go and have a look at that. But basically, we are seeing, and again, as soon as that Jerome Powell news came out, boom, big movement to the upside, testing this local top. And we have had a bit of a movement down because there was so much selling pressure on Friday. I think there is now a bit of everyone like, right, okay, well, we still have to buy some stuff. And things now might be beginning to be quite well priced. So I do think we will see this, a bit of a pickup today. Again, indicators resetting. But I think over the long term, i.e. this week, with the uncertainty that's coming up tomorrow and also the day after, a lot of people will be looking to get their money out of the euros and then into something safer, which is the US dollar, the world reserve currency. But then at the end of the week, guys, this is where we're going to have crazy volatility because we do have the non-farm payrolls. This is basically how many new jobs have entered into the market in the past month. So these are going to be reported in August, but they attain to July, the previous month, because we can't tell the future, unfortunately. But this is obviously pretty simple. And it's just an account of 141,000 businesses, but not in the farming sector. Hence why they're non-farm payrolls. Maybe they have something against the farmers. I don't know. But America has a lot of farms and a lot of farmers. So maybe we should throw them in. They might feel left out. But we also then will get the unemployment rate. So obviously we know how many people there are. We know how many new jobs have been added. And so if the unemployment was this, if there's more new jobs, then unemployment will go down. But that's not what we want. Jerome Powell has openly and famously said that he wants unemployment to get to 3.7 by the end of this year, 3.9 by the end of next year, and 4.1 by the end of 2024. So he has these targets. Will he reach them? I don't know. I don't know. Charlie, I'm just going to read through some of these comments. Smash that like button. Absolutely. Let's do it. Mamma mia, Ben is looking good. Thank you. Really appreciate that. I've just gone to walk my dog and I've come back and I might be kind of sweaty. So that makes me feel really good. But anyway, so I will get back into this. So yeah, just to wrap it up, guys, look, we have the new data that's going to be brought in on Friday. So that will be moving the markets. Unfortunately, I don't like this indicator. We'll call it an indicator, but it's not really an indicator. I don't like this as much as some other people do. Some people love it, but it's a lagging indicator. It's based on data, from ages ago, because the numbers, yes, they come in July, August. Yeah, I had to make sure I got that right. Yes, they come in for the month of August or whatever, but people might have applied 2 months before that. So it's not really a direct indicator as much as, let's say, CPI. So that's why I don't like it as much, but it does still move the market. And it gives everybody an idea, how healthy is the economy? Are we going to have a soft landing in or out of a recession? Because currently we are in one. And I know people don't like to admit it, but look, you're wrong, all right? Everyone is wrong. Everyone in the White House anyway. But anyway, guys, look, massive uncertainty that we're going to see here. Also then, fear and greed index not looking good for the wider market. And then, on Bloomberg, I'll just bring us back onto normal. We can just do a quick little look around, what is the overall sentiment. Everyone loving in Donald Trump. Inflation fever is finally breaking, but central banks won't stop hiking rates. So that's basically, we're going to keep going. And this is actually not as exciting as it is in the morning. Usually in the morning, it's like all about headlines and what's going to happen when the market opens. But now we're all just talking about like South Africa and like hurricanes. And I'm like, I'm here for business. Like, what's going on? But anyway, so we were massively down on the day. We are getting up a little bit. Like I said, there is going to be that recovery, probably resetting some of the indicators. But if you want to find out a proper, in-depth analysis, make sure you watch our daily streams where AJ breaks down everything in a much better fashion. And also, he might look a little bit better had he just walked his dog as well. Maybe we'll do that. We'll do like a little fashion show for you. But anyway, guys, watch out. There will be volatility if you're trading forex or anything I mean, to be honest, the eurozone is massive. But yeah, trading anything forex stocks related, this will have an impact. But then also, I think we'll probably see stronger dollar, and then we're going to see volatility kind of kicking in around that Thursday, Friday mark. Well, obviously on Friday, but this is before market open. 4:30 my time is 8:30 in the morning New York. So this is going to be pretty much affecting the markets an hour before the actual any news comes in. So make sure you watch out for that, guys. And I hope to see you then. Lots of love from me as always. Take care.